Okay, ready to resume with the second part of today's event. We're very fortunate to have a very good group here to discuss tax perceptions. We'll have this session moderated by Howard Gleckman. Howard's a senior fellow at the Tax Policy Center. He is editor of TaxVox and largely responsible for a big chunk of the high-quality content that is available on the Tax Policy Center website. So let me turn it over to Howard for the panel discussion.
Okay, Mark, thank you very much, and good morning, everybody. We're going to follow up a little bit on what Vanessa talked about this morning. From the perspective, actually, of some public opinion researchers and others who have a little bit of a different perspective. Let me first introduce our panelists. To my far right is Bob Tobias, who is Distinguished Practitioner in Residence, Department of Public Administration and Policy at American University. Bob was also the president of the National Treasury Employees Union and is a member of the IRS Oversight Board. Carlin Bowman is a senior fellow at the American Enterprise Institute, where she does survey research work. Chris Farrisee, who was supposed to join us from Syracuse, is stuck in Syracuse, where it is snowing in April. I'm not even going there. So fortunately, Glenn Berman has agreed to step in and provide us with a little bit of an economist perspective on public opinion towards taxes. Len is an Institute Fellow at the Urban Institute and, of course, was a founder and former director of Tax Policy Center. We'll leave plenty of time after we're talking for questions from you all. Let me start with Carlin, who actually has just published an interesting piece in the American Enterprise magazine, looking back at public opinion in 1986, the last time we tried to do a big tax reform. And I thought maybe we could start if Carlin could talk a little bit about what she found, or what she saw looking back 3 decades ago, how the public felt about tax reform then, and maybe we talk a little bit about how they feel about it now. Go.
Howard, thank you very much, and it's a pleasure to be here this morning. My work at AEI skates over a huge amount of public opinion data. I'm as likely to be looking at public attitudes toward the bombing of Syria or President Trump as I am to be looking at tax attitudes. So I consider myself a kind of dilettante of data as I look over a huge amount of survey data in many areas. And I became particularly interested a long time ago in thinking about tax attitudes. I mean, they're obviously very important for the reasons that Vanessa outlined, and decided to look back historically at public attitudes. We take no surveys at AEI. I just rely on data in the public domain, the Gallup polls, the Harris polls, all the rest, to try to make some sense of what people have been saying about tax data. And when we have a period of time where you have a significant reform, as we did in 1986, you really can look at attitudes in a particularly interesting way. And so what I thought I'd do is just say, as Howard has suggested, just a few words about the differences and similarities in the public mood. As Vanessa said, the political moment matters very much, and there's no question that that's true. In 1986, Ronald Reagan's approval rating until Iran-Contra in December was above 60% in every poll that year. Donald Trump's Donald Trump's approval rating at this particular point is in the 38 to 44 percentage point range. That matters, I think, in trying to push a major policy forward. As Vanessa said, we're much more deeply polarized than we were in 1986, and I think that, too, will have an impact on the possibility of tax reform overall. There have only been 3 occasions since the 1960s where our attitudes about government turned up and became more positive. After 2000 and after the 2011 attacks, after 9/11, attitudes became more positive for a very short period of time. At the end of the Clinton presidency, 1999-2000, the economy was humming along. People were very, very positive about the way things were going in the United States. The third period was 1984 to 1987. I think you all remember it was morning in America. We felt positive about the country. We felt positive about the things that government could do. And I think that really matters a great deal in tax reform. It matters in so many other areas. And one of the things I've been fascinated in looking at in terms of public attitudes toward rising inequality, the public believes it's real, it's serious, and when you ask them in the abstract, of course people want the government to do something about rising inequality. But let's take another question just on this one specific example that perhaps puts this issue in a very different perspective. And this is a question that's been asked 4 times by Bloomberg and Stelzer and Company since 2013. In thinking about the gap between the rich and everyone else, do you think it would be better for the government to implement policies designed to shrink the gap, or do you think it would be better for the government to stand aside and let the market operate even if the gap gets wider? 4 times the questions have been asked, virtually identical results on every question. The public is split down the middle. If we had higher confidence in government, would we have more confidence in government to address income inequality? I think it's possible. But certainly attitudes toward government matter in terms of the success of a major reform like taxes, like something on taxes. If you look at the survey data from 1985 and 1986, and I looked at some of the averages, people were much more satisfied with the way things were going in the country. Part of that was Morning in America, but let me just give you the comparison to today. In most of the satisfaction questions, satisfaction with the way things are going in the country today, between 65 and 72% said they were satisfied in 1986. That's 29% right now. That's a huge difference in terms of thinking about government policy and moving ahead. But what was most interesting to me about the tax debate in '86 was how little engagement there was in terms of the public. A stunning question asked a week after the debate was over. We'd passed a major tax reform bill, parties working together, took a long period of time. 2/3 of Americans told Money Magazine in a poll that they didn't know enough about it to have an opinion. They had been hearing so much about it for weeks. We're not deeply engaged on these issues overall. But that may give Trump perhaps some running room here. And let me explain what I mean. He has something going for him that's very important going forward in thinking about tax reform. When people are asked in poll after poll, as they have been since he became president, what's the most important thing that Trump could do for you, for the country going ahead? What's the most important thing? That question is asked in a lot of different ways, and the answer is almost consistently create more jobs. Correctly or incorrectly, in the handful of questions, and right now we only have about 10 questions on this since Trump's become president, people think that somehow reforming the tax code will do something to create more jobs. One final point about tax reform and tax changes versus something like health care. It was interesting to me in '86 that people wanted change rather than the status quo. If you look at the debate we've just had on health care, something that's so acutely sensitive for all of us, people feared change. That's not true of tax reform. They actually think positive things can come from tax reform. That plus the view of creating jobs, the tax reform may be linked to creating more jobs in the country if we make our companies more competitive, may give Trump some running room on the issue overall. But I don't think people will be very engaged.
Carl, let me ask you about that. I saw these numbers from your paper, and I was absolutely struck as well that after all that debate, after all that time, I was writing for Businessweek at the time, I was writing an article a week, and at the end of it, 2/3 of people had no idea what tax reform was about. It made me feel really good. The other thing that some of us old enough to remember '86 remember is Wright Rosti. So Dan Rostenkowski, chairman of the Ways and Means Committee, started what was probably one of the first social media campaigns in history when he went on TV and said, support me, support the President of the United States, Ronald Reagan, and send me a postcard that said, you support tax reform. And I don't know, I can't remember what it was, but tens of thousands of people wrote back and said they did. Today, we're in an entirely different world of social media. Do you think, Carlin, that it actually would be true that after 2 years of debate over tax reform in 2017, that 2/3 of people would still say, we don't know anything about it?
I think it's quite likely, actually, and this goes to some of the points in Vanessa's paper, and this insight is not mine, but it's one that's just had an enormous impact for me in thinking about public opinion generally, and this comes from Dan Yankelovich, one of the greatest sociologists, probably the greatest living sociologist. And Dan wrote a short essay a long time ago in which he said that people like us, people sitting in this room, we base our opinions on the accumulation of new factual information. And we're not going to pay attention to the details. I'm not going to go home tonight and read the Republicans' health care bill or something about climate change. It's just not on my radar screen this evening. But he said that publics don't form opinions based on the accumulation of factual information. And I really want to talk to Vanessa about that. He argues that people always start with their values. I'm consistent, and that's why the kinds of things that Vanessa is doing and her research about what those values are so very important. I'm always struck in polls when people are asked, well, where do you get your information about the new health care bill? It's rarely ever from solid sources of factual information, from my friends and neighbors, from my family. And those are always conversations that start with values. So any kind of major reform has to start with values, but we will always be factually challenged.
Look at how much confusion there is about ACA, and that's been in place for
Exactly.
what, 6 years.
One of the issues that Vanessa talked about is complexity. And it's interesting that when President Trump talks about taxes, he doesn't often talk about it in the context of tax reform, but he talks about it in the context of tax cuts or in the context of simplicity, which is, I think, another way to talk about complexity. And Bob, I wanted to ask you a little bit about this, about from your time at NTU and also on the oversight board at IRS. How important is this public concern about the complexity of the tax code, and how does it affect kind of people's views, people's attitudes about taxes?
I think that, as has been suggested this morning, that the concept of tax reform is complex, and it comes down to values and trade-offs. And the more complex it is, means there's more of it that I don't really understand. And if I don't understand it, there's more cynicism that I'm paying more than I owe and that all you out there are paying less than you owe. I create the narrative because I don't know. So the IRS and all of us depend on voluntary compliance to administer the U.S. tax code. And the Government Accountability Office recently stated, quote, IRS's enforcement of the tax laws promotes voluntary compliance by giving all taxpayers a sense that others are paying their fair share, close quote. So the IRS plays a very large role in ensuring or providing assurance that everyone is paying what they owe. But the fact of the matter is that today the IRS can give less assurance than it has in the past. And the reason that's true, very statistically, is that the tax compliance gap continues to increase, and this past year's it's at $548 billion. So at a time when it's $548 billion, the Internal Revenue Service audit and tax collection functions have declined over the past 5 years by about 17,000 people. And the amount of the IRS budget in tax-adjusted dollars, in inflation-adjusted dollars, is at 2,000 at the year 2000. So my sense is that with less compliance, the pretty much stable 83% compliance rate is going to decline because the IRS is giving less insurance. So how that translates is that now there are about 54% of all filers use paid preparers. If I use a paid preparer, I have no idea how it's calculated. I get the form, I sign it, I pay, or I get a refund. I have no idea whatsoever. And what's interesting is that you would expect that, I said 54%, it's about half use paid preparers, but 54% of people who make $30,000 or less also use paid preparers, and they use it primarily because they have to file a tax return to get the earned income tax credit. So whether you're at the lower end or the higher end, you have no idea what leads to the result that of how much taxes you pay. So I may not only resent paying taxes, but I also resent paying a tax preparer to tell me what I owe. So I feel helpless because I put my fate in the hands of a paid preparer while fearing that others are going to be able to manipulate the system and pay less than they owe. So I, like the president during the campaign, do not want to become a loser, right? I don't want to become a loser by paying more than I owe. So tax reform that increases rather than decreases complexity is not only going to increase skepticism that you're not paying what you owe, and I'm paying more than I owe. So the calculation is I might start cutting corners to ensure that we're all equal.
Thanks. I think it's an interesting issue. I play this parlor game, which loses me all sorts of friends, but it's instructive. Ask people at the next cocktail party you go to how much tax they paid last year. Maybe don't ask them in the next 2 weeks, because maybe they'll actually know, but after that. And it's remarkable to me that no one knows. They may know how much of a refund they got, but they really have no idea how much income tax they paid, much less how much total tax they paid. And I wonder, Vanessa talked a little bit about it, Carlin sort of touched on it as well, but how does this lack of knowledge of how much you're actually paying affect your opinions about taxes?
I would even add something to that. How many people know what percentage tax that they pay, right? Yeah. So when someone sees in the newspaper that the marginal rate is 35, do they think they pay 35% in federal taxes? Do they think they pay 10%? Do they pay 20%? There's no basis for, I believe that most people have no clue about what percentage their tax rate is, and so they have no real way of comparing themselves to others. But that doesn't stop me from doing it. That's the point. That doesn't stop me from concluding what the facts are, because as we all know, if we don't know, we create a narrative to fill in the blanks.
So I'm going to play Chris for a minute. He sent me some of the work that he's done. And one of the questions that he was looking at is, they asked people how much they thought different groups paid in all federal taxes versus for how much they thought they should pay. And the results are interesting on both sides of it, and the first half of the transaction is exactly what we're talking about. So they asked people about the top 1%, and they said that they thought that the top 1% paid about 28% in all federal taxes, but should pay about 38%. Well, that 28% for the top 1% is actually pretty close. That's not bad. But then watch what happens. They asked about the middle class. People think that the middle class pay about 30% of their income in total taxes. What, twice what they actually pay? And they think they should pay about 23%. So they even think they should be paying more than they're really paying. And then at the bottom 10%, they think they're paying 15%, which is like 5 times what they actually pay. And they think they ought to be paying 10%. So I think what Bob is saying is exactly right. The people have this gross misperception of what the distribution is of taxes, and it really kind of messes up their view about what people ought to be paying. I'm going to come back and talk a little bit about Chris's results, but let me turn to you and ask for an economist's view about people's perceptions about taxes.
Yeah, so I was thinking about this when I agreed to join this panel at 6:30 this morning, and I was also thinking nasty things about American Airlines, but I won't share those. The economists don't think very much about progressivity, or they haven't traditionally. It's something we punt on. We say fairness of the tax system is up to the public. And when we do model it, we say, well, there's this social welfare function that kind of reflects the aggregate views about what people should pay at different levels, and then we do a whole bunch of math and make a whole bunch of assumptions and get these implausible conclusions that vary depending on your political preferences. There have been some efforts in the past, actually some efforts now, to kind of justify looking at progressivity as basically people on the left in particular coming up with arguments for, well, maybe that's something the government ought to be paying attention to on rigorous economic grounds. Lester Thoreau had a paper 30 or 40 years ago where he talked about the income distribution as a public good, kind of like a park. And a better income distribution would make people happier and everybody could share with it, and worse income distribution would make them less happy. And therefore, it'd be worth doing things to make the income distribution better. And there's a new growing body of evidence on the relationship between economic inequality and growth, and kind of for a long time, conservatives talked about this, saying, well, very redistributive policies were a drag on economic growth, and now liberals are saying, no, if there's a lot of inequality, it creates problems like crime and poor education systems and things like that actually create a drag on growth. But I don't find the evidence particularly persuasive. The one thing economists agree on is on this notion that we call showing that we really know how to communicate with people, horizontal equity. And the idea is that people in similar positions should pay the same amount in taxes. Rudy Penner at probably one of TPC's first conferences 15 years ago made the point that there's not a single politician who thinks horizontal equity is a valid policy goal. That politicians, their stock in trade is convincing everyone that they're special. I've got a tax break for you. I've got other things that will help you specifically. And the growth of tax expenditures, I think, is evidence that politicians think this is a winning strategy. There are more than 200 tax expenditures that the Office of Management and Budget tallies up every year. And Chris's research shows that there's a lot of support, bipartisan support for the biggest tax expenditures, and also a lot of misconceptions. Vanessa pointed this out too about how they work. I think economists' blind spot about inequality, maybe up until 20 years ago, maybe it made sense. We like markets. We all go to graduate school and we learn about how under certain circumstances unfettered markets can produce enormous wealth, and anything you do to get in the way of these idealized unfettered markets would be harmful. It would slow down the economy. And 20 years ago, it seemed like markets were producing an okay distribution. Most people were experiencing growth in their earnings and incomes and feeling like they could get ahead. I think this last election is an indication that a whole lot of people feel like they've been left behind. And there's a lot of data to suggest that for large swaths of working class, that their incomes are not growing at all or not growing very fast relative to the overall economy. And the problem is that the things that are driving down middle-class incomes are structural. It's primarily automation more than foreign competition, even though that was the big issue in the election. And as computers and robots get better, wages and salaries for people who do things robots can do are going to go down. So figuring out a way to deal with distributional issues could be necessary to preserve our democracy. The alternative is you might get populist demagogues who propose policies that are inimical to growth, like trade wars and barring immigration and building walls. I suppose the last thing would be a Keynesian stimulus. And that don't actually help low-income people that they're purporting to assist. So we need to really think about this as a profession. And I think the research of political scientists says we need to think a lot about framing too. This didn't come up, but I know in other analysis, you can't talk about redistribution. That sounds socialist. Well, you can talk about things like supporting work and supporting children. Another thing that economists tend to poo-poo is this idea of earmarking, trying to tie taxes to the programs that they're nominally funding. And economists say, well, money's fungible. You can say payroll taxes are paying for Social Security, but doesn't really much matter because it's just that money could be used for other purposes otherwise. But the fact is, Social Security, which is probably the most, one of the most regressive federal taxes, has widespread support, and it's because people support the program that it funds. When Republicans were talking about things they might do to salvage their health reform effort, one thing they talked about was getting rid of actually keeping the payroll tax, the high-income payroll tax that was dedicated to extending Medicare solvency. It was, and I think it was because they saw that people supported Medicare, and that even though it was something that a lot of Republicans probably didn't like personally, they thought politically it would be hard to cut that back. So maybe thinking about ways that you can tie policies that are dealing with legitimate concerns about how markets are working, earnings, income distribution, with tying specific taxes to the things that they're doing that people might support might be a way to build durable support for these things in the long run.
Thanks, Len. Let me actually follow up a little bit on what Len said, and I'm going to play Chris for a minute and talk about some of the other results that he would have presented had he been here, which I think is really interesting, and Len sort of touched on this. So one survey asked people about a series of specific tax breaks: healthcare, pensions, the mortgage interest deduction, the earned income credit, deductions for charitable contributions, college savings, student loans, and asked people by party what they thought of these various tax breaks. And the results are very interesting. So most people like all of them. The one exception was Republicans, only about 44% of Republicans didn't like the earned income credit, which is interesting because it was an idea that was first created by Milton Friedman, but that's another story. But there was an interesting hierarchy. So overall, the most popular tax breaks were for healthcare. The second most popular were for retirement savings, for pensions. And that didn't matter whether you were a Democrat or a Republican. Then after that, there was some difference. Republicans tended to like the mortgage deduction, the charitable deduction. Democrats were more likely to like their earned income credit, and actually for them the charitable deduction was the least popular tax break. And then the other interesting point about this was a quarter of respondents had no opinion at all on all of them, and there was no difference between Democrats and Republicans. So again, this question of are people aware of tax breaks, and even those tax breaks that could benefit them? No. The other thing he found, which was very interesting, is the importance of self-interest. This isn't going to be a surprise to this audience, but probably worth noting that homeowners like the mortgage deduction. Workers that received employee benefits liked the exclusion for employee benefits. And students and adults with student loans like tax breaks for student loans. Then people were also asked questions about who they thought would make the tax code fairer. About a third thought that Democrats would make it fairer. About a quarter thought that Republicans would make it fairer. And almost 40% thought neither party would make them fairer. And then the same question about simplicity. 20% thought Democrats would make it simpler, 20% thought Republicans would make it simpler, and half thought neither party would make it simpler.
That was the right answer.
That's the right answer,
Yes.
exactly. And then finally, I always call this the Russell Long question. When asked what should be done to reduce the national debt, a series of questions about spending, but then 2 questions about taxes. 60% thought you should increase taxes for people making over $250,000 a year, and 20% thought they should raise taxes on everyone. Of course, you all remember Russell Long, who said, "Don't tax me, don't tax thee, tax the fellow behind the tree." And that's certainly the result. The other thing that Chris did, a separate paper that's, I guess, not yet published, but we can talk about it a little bit. It's a fascinating piece that looks at direct spending for social safety net programs versus the earned income tax credit. And this goes to this interesting question of framing. People are much more likely to support the earned income credit than they are direct spending for welfare program, for example. They are more likely to think that the earned income credit is less beneficial to minorities than the welfare programs are. And then when Chris asked them about whether they thought these programs should be increased or decreased, so first he asked them about welfare, and about 37% of people thought the program should be decreased, and 26% thought it should be increased. When it came to the earned income credit, 24% thought it should be decreased, and almost half, 47%, thought it should be increased. So it's actually remarkable when you frame essentially identical programs as a tax expenditure, as a tax preference, people like it far more than what's a direct spending program, and they're least likely to racialize it, as Chris puts it in his research. So this question of framing, I think, is an interesting one. And Carl, let me ask you, as a survey researcher and as somebody who looks at survey research, how important is this framing, and particularly how important is it in the context of taxes?
It is enormously important. You cited Chris's work, and when people were asked who's more likely to make taxes fair, but if you look at a very large number of survey questions over time, there are just all sorts of interesting, subtle things that tell you something about how questions have been framed. For example, if for a long time Republicans had an advantage on cutting taxes, that's completely gone. Steve Moore notwithstanding, but it's gone. And I think because politicians' promises on taxes may be less credible than they were in the let's say the early 1980s. But if you ask which party is more likely to hold taxes down, Republicans still have a pretty interesting advantage on that, but certainly not on cutting them because politicians' promises aren't credible. And certainly Democrats always have the advantage on fairness. And so how you set these questions up, I think, really does affect the responses. And some of this goes to the traditional views of the Republican and the Democratic Party, but the fact that tax promises are so much less credible than perhaps they once were, I think is pretty significant too.
I would add that if I already don't trust you, which is what Chris's data shows, I don't trust you, then the only way you're going to break through to me is by framing something that touches on my values or my interests. So that's why I think framing is so important to cut through to get attention that is so dismissive at this point in time.
Let me ask each of you, I want to go back again to Carlin's, the results that Carlin was talking about from 86. So 2/3 of people were basically disconnected from the debate. We're about to have this debate again. How important is it? Does it matter if the public is engaged in this, or will, in fact, their disengagement, as Bob suggests, make them more cynical about the result?
Well, it seems to me that in 1986, the sort of not too far interpretation is in 1986, I would live in an environment where my kids would be better off than me. Today, I live in an environment where my kids, my expectation is that maybe my kids are going to be less well off than me. So I think I live in a much more pinched world. I don't see broadly. And so I'm really worried now. I'm anxious about uncertainty. I'm worried about what's going to happen to me, and I don't trust anybody. So it seems to me that breaking through all of that to have a meaningful conversation on the facts based on my perceptions and fears enhances tax reform in today's environment, enhances the difficulty of tax reform in today's environment.
Len, do policymakers have to engage the public in this debate, or should this just be an inside game?
That's a really good question. It should be nice if the public felt like they could participate. And I think one reason why tax system has been such a mess is that policymakers could hide behind the complexity, and particularly in the business tax area. I don't think anybody really understands how business taxation works. One of Vanessa's results, I think something Carlin found, was that people widely support the corporate income tax. And economists talk about how, well, it's a double tax, and you probably ought to try to fix the corporate income tax so that it doesn't matter whether you're incorporated or unincorporated in terms of how much you pay in taxation. The debate about location of multinational corporations and border adjustable taxes, we're all consumed with this inside Washington. I think for most people outside this room, it's just kind of it's just background noise. So the interesting thing in '86 was that, at key points, Ronald Reagan could give a speech and get people engaged. Dan Rostenkowski went on TV and said, right, Rusty, you don't see any politicians who are really trying to do that. The health debate, President Trump never even tried to make the case for it to the public. He was just talking to the legislators. It'll be interesting to see whether they take a different tack this time around. But so that's a long way of saying, one is, it is important to engage with the public, and I'm not that optimistic they're going to do it.
Bob, I wanted to ask you about another issue about, we're talking a lot about people's cynicism and skepticism of taxes. An issue that's come up just in the last couple of years that I worry about a lot, but I want to get your perspective on. Actually, I want to get everybody's perspective on. And that's the effect of ID theft and this sort of ongoing issue. We just had an example the other day, happened
Yes.
again, ID, 100,000 were stolen. How does this affect people's attitudes about taxes, and are we doing enough about it?
Well, I mean, if people are surveyed about the Internal Revenue Service, they're most happy when they have no personal contact with the IRS. If my tax ID is stolen, man, I got a lot of contact with the IRS to clean that up, to get a new ID, and my fear about it being stolen in the future, my fear about how the information is going to be used ramps up. And if I'm afraid, how many people am I telling about my problem? So I think ID theft is a huge problem. And it's a huge problem as we see it today. And the story in today's Post was about helping people populate their form to get student loans. So the IRS was trying to provide a service, and that information was stolen. But in the future, if indeed the IRS is going to provide more online services, more contact through email, which is what taxpayers want, then being able to have a secure website is going to be important to whether or not that is used. So in terms of tax administration generally, in terms of how the IRS is viewed specifically, and how tax administration is conducted in the future is going to be determined by how secure the IRS website is.
Does this, am I overstating it to say that this could put voluntary compliance at some risk?
It could, but so far, it's the ancillary service as opposed to people filing their returns that have been the big problems. So far, it hasn't gotten to a critical mass. But if it came to a critical mass, I think it would.
Ron, have you got any sense of how this whole question of internet security affects people's attitudes towards government, at least in general, if not specifically towards the IRS?
I really don't. I haven't seen a lot of data on that. We certainly look at different age groups and how concerned they are about their own privacy, and millennials really are very different in terms of sharing information and being willing to do that but that's about as far as I can go, and that's really not on point.
Lennon, let me ask you about another issue that Vanessa talks about a lot, which is and Bob alluded to it as well. This is this question about, even though people don't understand how much they're paying, they don't really understand a lot about the tax code, they have this nagging sense that they're paying more than their fair share, and the other guy is paying less, is cutting some corners. As an economist, how does that attitude, even if it's not really grounded in reality, affect the way you think about how a tax code ought to be designed?
It's a really interesting question. I think actually one interesting thing in Chris's research is that over time there was actually a trend of more people thinking that they were paying their fair share. I think, as Vanessa said, it's maybe more of a concern for compliance than it is for design issues. Potentially, one possibility is, to the extent people think that others are getting these huge tax breaks and they're not, then obviously it puts pressure on policymakers to produce more tax breaks for you because you make you feel special too. I think, but the other thing is that to the extent that the tax system is based on voluntary compliance, and you have its, like you said, $550 billion tax gap at this point, that if there were a growing perception that other people weren't paying their fair share, it would be more likely that people would tend to cut corners themselves. Although, as Vanessa points out, for wage and salary earners, there's really not much opportunity to do that.
But you said before that you think actually that this would have little effect on the idea of a broaden the base tax reform.
Mm-hmm. Yeah, it actually could go the opposite direction.
The opposite direction.
I mean, the thing people don't understand, or my guess is they don't understand, maybe I'll ask the fellow panelists to comment on this, is that people have to pay for the tax breaks. So because there's a mortgage interest deduction, there's $300 billion lost to the exclusion for employer-sponsored health insurance, and these other tax breaks, people have to pay higher taxes, and tax rates have to be higher just to make the numbers balance. So the question is, could you explain to people that their taxes could be simpler and fairer if they got rid of some of their favorite tax breaks or scaled them back? It would be a hard sell, though, because people think these very regressive taxes are benefiting. Some of Chris's survey research showed that working class people thought that they benefited a lot from the mortgage interest deduction, the tax exclusion, and they don't. For the mortgage interest deduction, they might be worse off on balance. Most of them don't itemize deduction, so they don't get any benefit from. They wouldn't get any benefit from a mortgage interest even if they had it, and even for those who take it, they only. It doesn't lower their taxes by very much. But my guess is obviously people don't understand that.
Carl, do you have any sense of whether the public would be willing to support a tax reform that eliminated these preferences, lowered the rates? Would they feel that it was a better deal, or do you agree with Len?
I do agree with Len. I think it's very hard to read the survey questions. I mean, they're such a blunt and such a crude instrument. I think sometimes that they can mislead you by looking for that kind of detail. But I think people would like a simpler and fair tax code. There's no question about that. But whether they think they're going to get one is a very different question.
But isn't that the allure of the flat tax? I mean, the allure of the flat tax is everybody's going to pay what they owe, and it's going to be simple for me, and it's going to be simple for you, and we can do it on a postcard. So, but of course, then when reality sets in as to how much has to be paid, then people aren't so enamored with the flat tax. But it seems to me that idea, that issue, stays around and hangs around as an alternative to the complexity issue that we're discussing.
So it's one of the best political science papers, certainly one of the best cover was this one called Homer Gets a Tax Cut by Larry Bartels, who was at Princeton at the time. And I think that one was looking at the flat tax, and basically it was based on an election survey, and they said most people thought that the rich weren't paying their fair share, and most of them thought that a flat tax would be better. And the flat tax proposals that were in place would have made the tax system much more regressive. I mean, basically, one thing people don't understand very well is that taxes as a share of income rise pretty steadily with incomes, notwithstanding the high-income people's ability to take advantage of tax breaks. So there are two issues. One is that a flat tax rates would not be more progressive than progressive tax rates. The other thing is that a real-world flat tax would have tax breaks in it, just like our current tax system does. And the problem is that those are enormously popular, and for politicians, the politicians are really drawn to giving people special breaks, and they would be if we had something called a flat tax, just like they are under the current tax system.
So Vanessa, I think in the discussion with Mark, raised an interesting question, which was she very strongly felt that it was a good idea that we go through this annual ritual of preparing our taxes, because it kind of reinforces the sense of social solidarity, such as it is in the United States. I want to ask each of you if you agree with that. Do you think it's a good idea? We could, in theory, go to a pure consumption tax. We wouldn't have to do that. What do you think? I mean, is it a good idea to go through this ritual? Having been up till 11 o'clock last night, I'm not so sure, but what do you think?
Well, it is an opportunity for people to think about how the tax system affects them. The question is whether they actually draw any of the right lessons from figuring out their own taxes. There are conservatives who've argued that we should get rid of withholding, and we should make people, basically, you should make taxes as salient and as complex as possible, and it probably, make it as burdensome as possible to the individual in terms of having to write a check periodically, because it would reduce support for the tax system. If you look at support for the income tax, which you have to file every April 15th or so, versus payroll tax, the income tax is much more progressive, and support for it is much lower than for the payroll tax. And the payroll tax, it's part because payroll tax supports a program people support, but also it's not. There's no burden really in filing it. It basically just comes out of people's paychecks if they're employed. Whether it produce a better tax system is an open question, but it definitely, making people go through the ritual makes them think about it.
Bob, what do you think?
I gave up filing my own taxes about 10 years ago, and I consider it a loss. I really do consider it a loss. I was very proud of the fact that I could manage doing the returns. I was proud of calculating my actual percentage tax rate, which I still do after someone else performs. But I was proud of that. And, I identified with what you said. I pay my taxes. And I felt good about that. And, I thought about the highways and the roads and all the things that money went for. And now, I get a email from my accountant who says, sign this and I'll e-file your returns. And then 2 weeks later, and write a check. And then 2 weeks later, I get the form and I look through it. But it's not the same because I haven't put myself into the effort. So I think something is lost when I can't connect with results of that, of filling out that form.
Okay, Bob, I don't want to put you on the spot, but so why did you stop preparing the return yourself?
Very simply, my mom died. I inherited a rental property. And I thought, oh, man, no, I can't do that. That was sort of a tipping point for me. I just can't do that.
Jane Gravel has a good answer to that question. She says, well, I know how to change my oil, too, but I pay somebody to do it.
Changing oil takes much less time. Carlin, do we know anything about whether or not this sense of social solidarity is enhanced or breaks down because of this annual ritual?
Not anything that I've seen. I confess I've always wanted to meet the 10 to 12% of Americans who say in polls that they love paying their taxes. They love filing their taxes. And there are actually some people who, in one poll, I think it was a poll that Kellyanne Conway did many, many years ago, and you asked about whether you'd rather have a root canal or file your taxes. And there's some people who said that they would rather have a root canal. Well, most people would rather have a root canal than file their taxes. But To me, it seems like it's important. When you ask people about patriotism, about questions about patriotism, I'm pretty sure in some of the batteries, flying the flag, serving in the military, paying your taxes comes up as something people volunteer when they think what it means to be a good citizen or a patriot. So there's some connection there.
Yet, not to be partisan about it, but the president bragged about the fact during the campaign that he didn't pay taxes, and it didn't seem to hurt him at all. So what's that about?
So hard to think about anything involved with Mr. Trump, but they seem to like politicians who tell it like it is, at least who maybe speak for many people who are doing the same thing that he's doing, trying to find loopholes that are legal, if that's what he was doing.
I think he was. I think he was he touched on that fear that someone else is not paying what they owe, and I'm paying more than I owe. So I like somebody who's taking care of themselves and is only paying what they owe. So I like that. I like that quality because I'm fearful I'm paying too much. So this guy got lawyers, he's got accountants, he's, all of this stuff. And so I ignore the fact that he doesn't show me his returns to see how he does it. I ignore the fact that maybe for 20 years he paid 0 taxes, but he's protecting himself. So that's what I think I identify with.
And I aspire to that too.
I aspire to that too.
Interesting.
Everybody needs $1 billion loss to shelter their tax liability.
Let me give you all a chance to ask a few questions. Bill, we'll start with you.
Thanks, Bill Gale. I wanted to talk about the simplification issue, which I think the discussion has been very misleading. It sort of suggests that simplification is a technical issue. We just need to turn the screws and get it right. And in fact, it's anything but that. If you think about not just the tax system, but the spending system, all right, then suddenly the tax system, the income tax, looks much less complicated than the alternative. That is, if you were to take all the social policies and deductions and the long list that Howard read, if you took them out of the tax code and stuck them in the spending code, people would really hate it because then they'd have to file their income tax, then they'd have to go somewhere else and file for their charitable deduction, they'd have to go somewhere else and file for the EITC, go somewhere else and file for whatever other subsidy they get. So the fact that people have so much contact with the government through the income tax system means that it is a very good mechanism for running all these other subsidies through it. And so when we talk about simplification, we have to distinguish between whether we want to abolish dozens of social policies, which is a social policy issue, not just a simplification issue, or whether we're talking about simplifying literally the income tax, but complicating people's interactions with government by moving all those subsidies into the spending system. So I think simplification, everyone bows in favor of it, but I think the actual system could be much more complicated than it is, and there are actually enormous economies of simplification in running these subsidies through the tax code.
Do you agree?
Well, I think it's important to point out there are good reasons to run some programs through the tax code. I'm not sure that politicians actually weigh the pros and cons of doing all of these things through the tax code the way Bill and I might like them to do. And the fact is that there are a lot of things where it's just there's really not a role for government, and it's not just it should be moved from the tax code to a welfare office, but the program just shouldn't be there at all. There are other things where a lot of things where the tax code is just needlessly complicated. The earned income tax credit, I think most people in this room will probably agree, is a good program. There are lots of reasons why it's a good idea to run it through the tax code. There's no welfare stigma associated with it. It's easier than going to a welfare office during working hours through the year. But politicians have made the program really, really complicated. Actually, figuring out eligibility in a lot of cases is really challenging, especially for low-income families that might live in 3 or 4 different places over the course of a year, and where their children might be with them for part of the year and not for the rest of the year. You could simplify it if you wanted to. We've got tax subsidies for education run through the tax, for higher education, mostly run through the tax code. There's a question as to whether those should be there at all, or whether, whether it wouldn't be better to just put more money into subsidized student loans and more Pell Grants. But even if you wanted to have all of these, even if you wanted to subsidize higher education through the code, you don't need to have 7 different deductions and credits. Every single one of the credits has got a different phase-out range, and there are ways you could consolidate them together to make things simpler. And it would be good if people actually understood how the tax system was affecting them, and the complexity gets in the way of that. So I don't disagree with your basic point. It's certainly right that when you're thinking about whether something should be done through the tax code or through a spending program, you should have a realistic view of both. And spending programs are not costless. They're not perfect. They're not administered perfectly. But there's still a lot more that could be done to make things simpler. And I wish it mattered more to politicians.
Bob, what do you think about that? I mean, does from the administration of these programs perspective, is it most efficient to run this through the IRS, or would it be better to run these through the agencies that do the direct spending?
Well, imagine yourself sitting on the telephone, getting a call from someone who's trying to sort out EITC. And the person on the other end of the line, who, as suggested, is moved 4 or 5 times, their kids are there sometimes and sometimes not. And you've already waited 45 minutes to get on the phone. And now you're really angry because you've waited 45 minutes. And I'm receiving this telephone call. And maybe because you're angry, you're speaking fast, and so I'm asking you to slow down, and then, of course, that makes you more angry. And then shortly after that, you hang up, you file incorrectly, and then someone comes after you because you didn't file it correctly, because a lot of those returns get audited. Now, as suggested, making that simple would save everyone. And there might be, the trade-off is there might be a little bit more fraud.
You could actually cut down on fraud and make it simpler. They would just cost more money. It's a real trade-off. I mean, you could just say there's a wage subsidy. You get a subsidy on your first $10,000 of earnings. That would be really simple. And there's a child subsidy. You get child subsidy if you have kids. And the wage subsidy could be tied directly to payroll tax withholding.
If you made it that simple, everybody would be happy.
Good. We should sign up for it.
Okay, we solved something here. Good, we can move on. It's actually remarkable to me. Several of my colleagues at the Tax Policy Center participate in the VITA program and do voluntary tax preparation for low-income people. And these are people who are PhD tax economists or tax lawyers who are used to doing big corporate deals. And they come back after filling out the first couple of EITC forms, and they go, "Oh my gosh, I mean, I've never seen anything like this." So I think that's right. It seems like there is a way to simplify. Bob, though, I want to kind of get back to Bill's question. Though, is it more efficient, though, in the end, to do this through the tax code rather than as direct spending, notwithstanding the problems that you addressed?
I don't know enough to say that it would be less costly or not, but I think that the issue that is raised and often not really addressed is which would be better at inception. Is it better to run it through the IRS? And normally these programs are attached to the IRS, or the rationale that's given is, well, the IRS is the only place around that could effectively administer this program, so we'll give it to the IRS to do. But that's not answering the question of what's more effective. Is it more effective to do it outside of the IRS or inside the IRS.
So I want to go back to Chris's research for a second. If he were here, I think he would say this. So I talked a little bit about this project he did looking at direct spending, direct safety net spending, and the EITC. Two things that he found, which are actually quite remarkable results. He looked at how people respond to direct cash payments. There are two things that they saw in direct cash payments that they didn't see in tax credits. The first one was that they didn't see that tax credits were direct spending, were government spending, when they saw that the direct spending program was government spending, and that's not surprising, I guess. But the other thing was that, and I'll just read from his paper. It's important to note that many citizens fail to recognize or characterize tax expenditures as specific forms of government intervention in the economy. Mm-hmm. So not only do they not see it as spending, they don't even see it as government intervention in the economy. Somehow something else, even though it's a tax credit. So I think that answers the question about why politicians design it this way. They're really off the hook. They're not only not spending more money, they somehow appear to not even be intervening in the economy.
I think that's going to be the real issue around infrastructure spending. Is it going to be financed with tax credits for precisely the reason you offer?
Carlin, again, the survey research question, what do you see in terms of people's attitudes about direct spending as opposed to tax cuts?
It's such a big universe. I don't know that I can talk about it in broad brush strokes. Again, they're suspicious of tax cuts at this point, and they're also suspicious of what government spending that just continues to grow and grow and grow in their minds, correctly or incorrectly. I think I don't have an answer because I think it's pretty complicated.
Other questions from the audience? Yes, sir, in the back.
Hi, I'm Rusty Guyman. Up until last year, I retired. I worked for Bob for about 10 years at the Oversight Board. I had a comment and a question. The comment was, first, I think Vanessa deserves a commendation for her work. As many of you know, the Oversight Board has done has commissioned an annual survey of the public about attitudes towards the IRS and towards tax administration. And they actually, the public does not hold that harsh negative view that you often see portrayed. So I think that's a real service, and I hope that gets more publicity. One of the questions I had is, and Bob and I have looked at this once earlier on, is that when we asked the question, recently the board survey asked whether you trust the IRS to fairly enforce the tax laws. And the majority, 60+%, basically agreed with that they would fairly enforce it. But there was a sharp difference in ages. The percentage in the younger group, 70+%, trusted the IRS, and then in the older age groups, maybe a little over 50%. And so I guess maybe to anyone up there, but maybe Carlin, to you as well, do you notice differences in the age groups, and do they stick or do they change over time?
Let me just say a few words about views of the IRS. I mean, I know those surveys. I think they're wonderful surveys. In the few questions in the public domain that we have about the IRS, a Pew trend, another Gallup trend, the IRS has now recovered from its problems of a few years ago. And it brought up one thing where I think I disagreed with Vanessa, and that is the notion that we should get people to sign up to register to vote when they're paying their taxes. One of the things I've noticed about government agencies that appear to be successful in the public mind is that their missions are very clearly and very narrowly defined. And once you get an agency that moves beyond its general mission, has myriad responsibilities of different kinds, those agency views and positive views of those agencies tend to come down very, very sharply over time. I mean, it's been interesting to me, the military, most highly respected institution in the country, all the scandals from Tailhook to Abu Ghraib just seem to wash over the military. Its mission is clearly defined. It protects and defends the country, and the military stays up in the stratosphere compared to most other agencies. But once NASA's views of NASA are extremely high. It does some very specific things. when an agency never wants to be in the news, as the IRS was a few years ago, but it's definitely recovered. Young people's attitudes on, first of all, they're less confident in central institutions generally, whether it's government, marriage, big business, and perhaps those attitudes will change over time. They tend to be mercurial in some ways. I don't know the age data, though, in terms of views of the IRS.
Carlin puts her finger on an interesting issue.
Yeah.
The IRS is being asked to do more and more things far beyond its you think of its basic mission as collecting money to pay for the rest of the government.
Well, and the scandal was actually because the IRS was asked to figure out whether these organizations were political or not,
Right.
and that was really outside
Yeah,
tax.
exactly. So
tax
stick to
compliance.
its knitting.
I wanted to just pick up.
Sure, wait for the mic. Go ahead.
Thank you. I wanted to just kind of follow up on a comment that Len made and relating to the assumptions in economic models about rational economic behavior. And I think, would say that Vanessa's work is very valuable, and it also is kind of coincides with some of my experiences like Howard's about asking people, how much tax do you pay? You know, what's your effective tax rate? What's your average tax rate? Nobody knows. I don't know mine. and I think that the importance of the work is to try to integrate that work with what economists who are running models are assuming. And I think this came to mind because the Tax Policy Center published a short summary of description of the models that they're using for dynamic scoring yesterday. I think it was an update. And I was reading it and thinking about the rational taxpayer who was supposed to behave in a certain way. And seems to me, a very big disconnect between that theoretical rational taxpayer and the taxpayers that Vanessa has talked to and surveyed, and one's personal experience. So it kind of means that when you're running these models using behavior predictions, that there's a disconnect, that you have to have a certain serious skepticism about what comes out. And I think that I would hope that the economists who are thinking about this would take that into account, and whether they are.
So I agree with you. I mean, rationality makes economic models a lot simpler because irrationality is there's an infinite amount of irrationality. But there's a discipline in economics, behavioral economics, that's actually trying to figure out how real people make decisions, talking to psychologists and others. And Bill Gale actually has done some work looking at some behavioral responses to retirement tax incentives, and it is helping to shape. It's helping to shape better public policy. It's the idea of signing people up automatically for a retirement account rather than expecting them to spend 5 minutes filling out a form that could save them thousands of dollars under taxes over the rest of their life. Makes a big difference. The other thing is it's shaping the way we do empirical research. It's slow, but I think more and more people are looking for possibilities that people might not understand their economic incentives the way they actually affect them. And I think, I was talking to Carlin before this conference, there are a lot of things in the tax code that are really confusing, and it's very likely that people respond to incentives that don't even exist. For example, there's this thing that tax wonks call Ps, the phase out of itemized deductions. And a lot of people think that it makes itemized deductions less valuable. Well, it doesn't for almost everybody. What it does do is it's a sneaky surtax. It adds 3 cents to every dollar of your income above a certain point. It doesn't reduce the incentive to give to charity. It doesn't affect how much you get from the mortgage interest deduction or anything else. But people don't understand that. And it's possible that people are reducing charitable contributions because they think this tax incentive, or they're losing the tax incentive. And I think that's that's certainly a cost to complexity in the tax system.
Yes, sir.
Hi there. I wanted to ask a question that hasn't been addressed yet on either of the panels. But it is, I'm one of these weirdos who really does like doing my taxes at the end of the year. But I'm a tax
Only wants
professional.
to talk to you after the.
I'm a tax professional, and so I'm used to this stuff. And I get very excited actually when people say, "Oh, my taxes were really hard this year," because I want to know why. I want to, so that maybe they rented depreciable property, or they had an AMT issue, a state refund, and they had to figure out how much was attributable to the state refund. Cool things. And about 80 to 85% of the time, I'm deeply disappointed with their answer because it begins with, "I moved states this year."
I'm what?
I moved states this year. And I'm wondering to what extent states are getting off the hook here a bit, especially on, with multiple residency issues. And to what extent are the feds actually sort of taking it on the chin a bit for the states in that regard? When people are looking at survey data, are they thinking about taxes? And are they distinguishing between federal taxes and state taxes? And do we have any sort of sense that people actually make that distinction at all?
Arlen, do we have any sense of that?
People tend to think of their taxes as a lump. There are some taxes that are considered much more burdensome than others. The local property tax, certainly in the few surveys that ask the question, people find that that's the most disliked tax. But I think they tend to think of their taxes in a lump sum.
Well, it's kind of interesting. The IRS takes it on the neck for tax policy, right? The IRS doesn't create tax law. It struggles with, to implement what Congress creates. And so one thing that, in the interest of trying to point that out, if you'll notice, if you send a check to the IRS, you're supposed to send it to the United States Treasury. You used to send it to the IRS. Trust me, the IRS will cash it if you send it to the IRS. But it was an attempt to make a distinction between who creates the tax law and who administers the tax law. But I think it was totally useless. I think it had zero impact. But, the IRS is held responsible for what Congress does.
Other questions? Eric.
Oh, Eric Toder. So I'll ask a question that you probably can't answer. The health care bill just failed, and I think one of the reasons was very low public support for it. And now they're moving on to tax reform, which everybody thinks is the wonderful thing they have to do. So I guess I wanted to ask the panel, what would a tax reform look like that would gain either public support or at least not big public opposition, public acquiescence?
So, Carlin, were there elements of the 86 Act that people liked? We know that most of them didn't even know it was in it, but of those people who did, were there any elements that you could identify that they liked?
Taking people in the lowest quintile, I guess, off the rolls. Of course, if you looked at the polls afterwards, most of those people didn't think they'd been taken off the rolls, so that was interesting in itself. But I don't know anything about what the provisions should be, but what I do know is it needs to appear to be bipartisan. That's just incredibly important. I mean, to have a Rostenkowski and a Reagan working together, a Bradley and all the other people who were involved in that particular point was just, I think, very important to moving it over the finish line. I think so, because we're also more polarized than when we were before. So I think that would be very difficult. It has to have bipartisan support.
What do you think?
I mean, I'm discouraged by your polls that show that people are less interested than they were 40 years ago. And part of the issue is that maybe the tax code's not messed up enough that people feel like they understand that there's this real impetus for reform. We, in the Bipartisan Policy Center, we put together a plan which would have taken half of tax filers off the rolls, would have had their tax returns calculated automatically. And I like to think that kind of thing might be really popular. And he said, well, simplicity would be helpful, but thing you think back to is when the Tax Reform Act of '86, the first draft that was put out by Treasury was called Tax Reform for Fairness, Simplicity, and Economic Growth. The second version, which was the one that had political reality interjected, was called the President's Plan for Tax Reform for Growth, Fairness, and Simplicity. It basically moved to third billing, and by the time they were done, the only simplification was they raised the standard deduction, but there were a lot of new complexities.
Bob, any thoughts about that?
It seems to me that in a polarized world, bipartisanship is important, but having people participate in some way in this effort would be incredibly important, because that's the only way you're ever going to break through and reduce the cynicism and the skepticism if I have some skin in the game in some way that I'm participating in this effort. But that's so counter-cultural to Congress, whose attention span is limited, to say the least, right? So this would have to be a really concerted, bipartisan effort over a period of time that sought to engage the country, rather than being seen as a win if something passes.
It's interesting listening to Chairman Brady after having seen the experience of the health law, where he's now saying, well, maybe we'll hold some hearings and maybe we'll have a markup and maybe we'll do this more in the context of regular order. I think he's maybe a little nervous after having seen what happened to healthcare. So he may be taking your advice. Yes, sir, in the back.
Some countries are moving to a cashless system. I think Sweden is trying to do that, for one. Would that open the doors to a more fair or simpler system?
Do you know about that?
I hadn't really thought about what the implications would be for tax policy.
Money laundering.
Just like Vanessa had mentioned that employees whose wages are well documented have a very simple system in filling out their taxes, basically. Here, if one has no cash, all transactions are going to be tracked, basically, or have the ability to be tracked. Wouldn't that open the door to instituting a system that would be much easier, for one thing?
It's certainly true that when there is an independent source of information to verify tax liability, compliance is a lot higher. That's why wage withholding is like 99% compliance. But when Congress has tried to actually expand information reporting, particularly get information from financial institutions, there's always been a lot of pushback against that. And probably in Sweden, it's a lot easier to get all of the financial records so that the government can monitor compliance. So you could imagine that, potentially it could make compliance a lot higher, but the government would have to get a whole lot of information about what individuals were doing financially, and my guess is there'd be a lot of resistance to that.
So the Nordic countries have tried another experiment, which is interesting in this context of cynicism about, Len and I make the same amount of money, but he's getting away with murder and I'm not. Mm-hmm. So in a number of Nordic countries, tax payments are fully transparent. You can go on the web and you can see how much your neighbor paid in taxes. They've struggled with this. I mean, there's been some interesting kind of back and forth there. But it's an interesting question if we ever went to a system like that in the United States, where at least younger people are sharing everything anyway. What if we knew and we could actually see, how much horizontal equity there was? Would that reduce the amount of cynicism of Americans about the tax code? Well, what do you think?
Not if you just use the current tax system, because there are my situation, even though our gross income is the same, what taxes we pay can vary wildly based on the deductions, based on my depreciation of my rental house that you don't have.
You got that shelter,
I got that shelter. I got that $2,000 shelter that I pay an accountant $2,000 to find for me. So I don't think it would be informative. What would be informative if the tax code was simple, so we were really comparing apples to apples.
We're about out of time. I just want to take the prerogative and ask one last question of the panel before we go. Given everything we've said, given everything we heard from Vanessa, everything that you all have said, what does this tell you about the prospects for tax reform in 2017? And we'll start with you.
I think we need to do a lot more public education to get real tax reform. I'm not really optimistic that we're going to get it this time around.
Carlin, what do you think?
I would agree with that. But I think Vanessa's work is just so important in thinking about how we might get the public more engaged. I think it's going to be extremely difficult, but I think it's worth a shot.
Bob, what do you think?
I agree with that. I think framing and recognizing that we're really talking about values when we're talking about taxes. When we're talking about reform, the reform is my mortgage deduction reformed, or is your oil drilling reformed? And so that's a reflection of values, but it's not spoken in terms of values. And people aren't challenged to identify their own values and how that impacts on the recommendations they make. So I'm agreeing that it's the framing, it's the discussion, it's the dialogue that's going to make a difference, as opposed to saying, well, you're going to pay $50 more, $50 less. That doesn't answer the question.
Okay, well, thank you all. Thanks to Carlin and Bob, and especially to Len, who jumped in at the last possible minute to fill in for Chris. So thank you all very much.